and doing great. We got Bitcoin trading at $110,250. And yes, indeed, Kenny, it is right on time. It happened to tag. I have to tell you from far out, just a few weeks ago, during April, during Liberation time, Bitcoin under correction 30%, it looked like that the possibility of Bitcoin tagging the confluence area that it certainly has right now seemed to be, well, a little bit out of the cards. And here we are right now, Bitcoin trading right off its all-time high, right in the confluence area. And then my eyes are further on the chart to the right, the bigger bucks, where Bitcoin is going to be towards its cycle high, a lot closer to the 2028 halving than the 2024. Again, consistent for a long time about this. A lot of people think the cycle had already peaked. A lot of people think that the cycle is about to peak. A lot of people worried about almost double top-ish price behavior. Anyway, I have my eyes on the prize. Let's go CTM. We got, of course, over here, I love visualizing like this. A lot of people will think if we are seeing a next leg up, if we do see a break above 112,000 into the 120, 130, that we're seeing some type of acceleration that might lead to a blow off top. Again, even if we have some further upside price action, I'm a lot worried about what happens in between, but zooming out and looking into this area, expectations that I have set is that because of the rate of adoption, we are going to, this particular cycle, disprove diminishing returns. It is going to be a beautiful, beautiful ride. I want to come back to this. I want to come back kind of to that. I'm looking for something particular. So I'm going to go ahead and try to find it. Well, I'll come back to that in just a moment. ETH is looking pretty good, by the way. Let's take a look at ETH. Let's just have a lot of fun and make sure that we cover a lot of ground today because it's been a 3-day weekend. Memorial Day yesterday. We were not live. Here we are. And I like this chart because if you follow CTM, the last time that we looked at this chart was somewhere in this area. Oh, we got to get the highlighter going over here after the restart. A lot of people right now over in Vegas at the Bitcoin conference. I hope they're enjoying themselves and working hard at doing their best to understand the bullish case for Bitcoin even further. We'll get into that in a little bit as well. This is the last time we looked at it. I just happened to pull up this chart about a week ago again, and we had the double black diamond breakout. We had the black diamond breakout and then the conservative breakout, and all three happened to be tagged since. We've been consolidating since. If you look horizontally with me, you can see this resistance from over in the fall of 2024 is definitely in play right now. A leg up from there, that is going to take us into challenging around the $3,000 area. That would be a nice leg up. We're already sitting about 56% into profit. That would really send it. Looking forward to when that happens. I'm going to go ahead and just get back on here for when I come back to it. CTM. So just taking a look here quickly over the markets, we see ever since, I got to start with this. Ever since says Trump backed away from his threat to impose 50% tariff. I mean, what I saw was that, and you see over here, if you go further down, you see several Eurozone countries signaling they want to move quickly to strike a deal with the U.S. And after they made it known and they said, listen, we need actually to July 9th. Was it July 9th or August 9th? Someone please help a brother out. Let me go ahead over here. I think the pause ends July 9th. We need to July 9th in order to go ahead and be able to basically work out an agreement. And Trump was like, okay. So, I mean, restoring the July 9th deadline to allow talks. So, I mean, it's weird. It's kind of funny how things are massaged. Trump from my view, and I like to share my view with you. I like to share my vantage point. Do have a strong history of interpreting things really well, being on the right side across thoughts, across markets, and I hope that it's able to help you do the same. But but Trump basically saw that these deals were going nowhere. And we've been talking about, look, it doesn't look like any deals are about to get done. Doesn't seem that any countries have any type of incentive, and they're just kind of waiting it out. They don't really like the terms. And now all of a sudden, the EU is very eager to work out an agreement and move quickly for it. So if you ask me, I don't know if he's backing away. It seems if you're trying to negotiate something and the person you're trying to negotiate with is like, okay, we're interested. We need a little bit of time. Okay, let's do that. That's what we're all about. Seems like a good thing if the EU and the United States are able to work out some type of mutual agreement. Markets would certainly like it. You see also that Japan's chief trade negotiator indicated his aim to resolve tariff talks in time for a June meeting between the US president and Japan's prime minister following Trump's surprise pivot to allow a partnership between the two countries' steel makers. And we all know that from the US's position, well, they went in really hard, but we know Trump's whole art of a deal is go in really hard and then negotiate down. And it seems that you're seeing a little bit of that negotiating down being welcomed by the other parties, and that all looks pretty good. So we've been talking about this, and we've been talking about bonds. So we're going to move a little bit into the 10-year in a little bit. It looks like that you're seeing the 10-year here break down from a sell impulse a little bit right now. And by the way, we said, and Joe, one of the things that the Treasury could do here to help ease the pressure out on the 10-year is go ahead and loosen the banking regulations as far as how much assets, the leverage that the banks could hold, and cause them to go ahead and actually take on more, I'll say leverage. It is leverage. They're able to buy more bonds, and then they could use those bonds as collateral for other endeavors. Says by this summer, they may ease a rule that served as a constraint on banks trading in the 29 trillion treasuries market. We are close to moving on the so-called SLR, supplementary leverage ratio. Bessent, U.S. Treasury Secretary Bessent has just said. And then we'll get in a minute, we'll move back into Japan and what's developing in their bond market. By the way, key events ahead and key events this week. We have on Thursday, don't forget, today's Tuesday. We have preliminary GDP, unemployment claims, and then on Friday, we get the core PCE, and that is forecasted to tick up. It's something that we're seeing here tracking on true inflation, definitely seeing a rise, and something that we said that we were going to be looking for going forward would be some upticks. Now, the Fed throughout all of this has also chimed in, and we got some Fed speak, and they're saying that, listen, we don't need to do anything. There's a healthy debate among policymakers, Fed policymakers, about whether to look through the inflation effect on tariffs as a transitory shock. Please don't use the word transitory, right? Especially if you're on the board of the Federal Reserve, you have no business using it, or long-lasting issue. Obviously, it's not a long-lasting issue, but nevertheless, Salesforce, we want to get into CoreWeave today, look at a chart of CoreWeave in a little bit. Nvidia earnings, we're going to jump around. We got so much to cover as it's been a 3-day weekend. And what's going on? This, by the way, right here. We talk about the bullish case for Bitcoin, and it's two things. It's the basement of the currency, right? Now, whether you're talking about dollars, euros, yen, fiat currency, and then also the adoption. Look over here. You've seen ever since 2022 when the Fed began tightening. Don't forget, right now, rates are still elevated. there's talk that the Fed's next move may actually be to raise rates. And you can see that they're still right now running quantitative tightening, and you can see the debasement is kind of like flattened out. Here was the peak in 2023. This is when we had the bull market breakout for Bitcoin, and like you can see that we've just rounded. We talk about rounding bottoms. It's a bit of a rounding midterm over here. Eventually, this thing is going to break through on the next easing whenever that happens. And by the way, just because it's rounding down doesn't mean it's not going to come back up, but ultimately it ends down that way. And while we've seen the debasement pretty steady, it's that other factor that has caused the massive appreciation in Bitcoin. It has been the adoption factor. And the adoption factor is seen in so many different ways. One of the ways we view the adoption factor has been that, well, we saw that Bitcoin made a new all-time high prior to the halving, not after the halving, and that was one way it was easily visualized. Did you just see that Trump media is raising to 2.38 billion dollars in order to add Bitcoin to their treasury? And they're not alone. We've seen the rapid acceleration of different corporations taking on Bitcoin positions led by Strategy. What do y'all think about Michael Saylor over at the Bitcoin conference saying, listen, proof of reserves? Nah, we don't want people knowing where the wallet is. That's a security risk. I mean, everyone knows where Satoshi's wallet is. Is that a security risk? I don't know. The basement. We got Nvidia's earnings coming up right up over here on tomorrow, Wednesday. See, I'm telling you, guys, don't forget it's Tuesday, 3-day weekend. In my head, it's kind of Monday. What tomorrow after the bell, Nvidia's earnings. We're out of the market currently on Nvidia after recent tight stop loss here on Nvidia. Shaking out, no doubt, closing that little gap up over here and now resuming up. You know what? I feel perfectly comfortable being out of Nvidia as it goes into its earnings. I mean, guys, I expect that Nvidia is going to be, remember how long this has been going on when we saw like all the way back, I have to call it over here. I remember doing some spaces in the spring of 2023. And the other people on the panel are like, Nvidia is like way overvalued. It's going to go right ahead of it. I mean, guys, Nvidia's earnings likely, are going to not only be favorable, but I imagine that I imagine the forecast is going to be pretty good too. These chips are in high demand. I think it's going to be pretty good. So I'm just thinking, wow, we're out ahead of earnings, but it's a safe place to be. If Nvidia is going to be able to go ahead and run to new all-time highs, we have plenty of time. Rather be safe out on the sidelines here ahead of such a high impact news event. Has anyone heard what type of volatility to expect coming into the earnings tomorrow? TQQQ continues to hold open position, 6% into profit, and Tesla continues to build into profit now, 12% into profit. I don't think quantum computing is a risk to Bitcoin. I mean, if tomorrow all of a sudden someone like were to reveal that they've achieved quantum computing on a level where like nuclear codes and all sensitive government and private information that's at risk, and also that nice little honeypot of Bitcoin and Satoshi's wallet. Yeah, of course. But you see right now, the US behind the scenes is looking to basically upgrade all of its security to make it quantum computing proof. By the time that type of compute is achieved, there's no doubt that Bitcoin will have upgraded to be able to prevent any type of quantum computing attack. And Bitcoin is simply not a high priority. People will look at like, well, where's the Bitcoin reserve? Guys, they're like 130 days into the current administration, and they're working out trade arrangements with the entire world. like the Bitcoin strategic reserve is obviously not at the top of the list about like things that need to be achieved. We talked about from the beginning, but I mean, is quantum computing a bananas? But I like that word. Forward guidance being bananas would, if we were to see that type of thought play out, we would obviously see on the headline likely the algos sell off Nvidia hard and then realize, wait, the guidance is spectacular, and then buy it up, and a lot of people might get wrecked. But eventually, we will see quantum computing to definitely make some leaps and bounds. I don't think we're there yet. I've heard 5 to 7 years. I've also heard actually a lot longer than that, 15 to 25 years. We'll find out. That's why this journey is awesome. But so while we're on stocks, so what do you guys think about this? You got what you remember when Apple introduced the iPhone? I stood aside on version 3, and I think version 4, like when I first saw it, right away I was like, this is amazing. And I don't think that I had the foresight at that particular moment to realize what a banger of a product the iPhone was going to be. Like, do you think Elon is talking about, and Elon does have a history of being actually right about a lot of things that he's been able to achieve. Do you think that it's a super big deal? Do you think that the Optimus is going to be one of the biggest products of all time by far? 10 times bigger than the next biggest product ever made, which I would say probably the amount of sold and units sold, and the iPhone is definitely up there. And he's saying Tesla and Tesla's manufacturing and their capabilities is absolutely phenomenal, that they're the only one. Or do you think that Elon's political parlay has cost him half of the retail, the consumers of the United States of America? And Japan's not, I mean, China's not interested. They're gonna have their own humanoids. They're probably not interested in Tesla. Do you think that Elon has basically, his politics have gotten in the way of his business? And then I could imagine there's half the consumers in America would never, ever, ever buy a Tesla again and or a Optimus because of that. I could be wrong. That's why I want your opinion. That's how I feel. I'm not sure that's correct. So I'd be interested to get a little bit of thought on that. CTM. So holding stocks strong and steady here. Currency debasement, the adoption. Have you ever seen these retirement plans for Bitcoin? Mark Moss 5-year retirement plan, starting with only 100K today. In 5 years, you could then pull out 100 tax-free every year after that. The assumptions made there, I don't know. The assumptions are that this year in 2025, we're going to see 100% return, followed by a 50% correction next week and next year, and then 27 and 28, 100. I don't like when we look at any of these. You're planning your retirement. What has the CAGR been for Bitcoin over the last 4 years? I think right now, even with Bitcoin's recent pump, it's somewhere around 12%. I don't know. I feel funny about trying to plan my retirement off and then just trying to make some assumptions about what the price, the going forward price gains of Bitcoin would be. Is there something that you can do to put those odds more in your favor? That's the question. Bitcoin right now, our current position, we looked at stocks. Here's Bitcoin and crypto. Then we're going to get back into the macro and take a look at things like Japan, their rising yields, the US 10-year. I don't think I have gold set up over here today, but we'll look at it from afar off our dashboard. What's going on with gold, NASDAQ. We'll take a look at it all. Ethereum still holding its open position, 57% into profit, hoping it makes it's that next leg up. That could be really beautiful for us. Cardano just exiting a trade now, back on the sidelines, and Solana also out on the sidelines. Bitcoin bull runs currently in a trade. Hold on, over here I have the start date off because I was just doing some knack and math about trying to put the things in your favor. Right? So this is since 2020. Let's move back once, but point was being, sorry. Currently in an open position, 11% into profit, suggesting that Bitcoin here has momentum to run. Love to see it. Come back over here to 2012, right? And you can see the drawdown over here, so attractive, 20%. Beautiful return. Demolishing buy and hold on Bitcoin. People say it's impossible. Check this out though. And does anyone know the yearly returns? Could someone put up for me could someone in the chat put up the yearly returns for the year of 2020, 2021, 2022, 2023, and 2024? Could someone put up the last 5 years of returns on Bitcoin? And we'll move over back to that. Bull runs, peace of mind, and more importantly, or not more importantly, but how are you able to have calculated returns to be able to achieve such feats, right? I think, and one of the things that I've been meaning to do is put together, not just here for Bitcoin, which I think is so important, but also, and I know it's different around the world, but in the USA, a lot of people obviously could utilize something like a Roth IRA, where you pay tax up front and then you grow it tax free. When you pull it out, you don't pay tax on it. You could also do a normal IRA, where instead of paying tax now, you get to grow it tax free, then pay tax when you draw it out, or even like a health savings account. All of those things are very important for planning our future. Over here on this is our worst performer on stocks, TQQQ, right? And if you look at since 2020, 723%, well over averaging what is needed, the compounding growth rate that's needed in order to achieve those goals. Nvidia since 2020, Tesla since 2020, and you're not seeing over here FNGU because right now the ticker's under maintenance, I'll say. But I can't ask ChatGPT why I'm on the call with you. So if someone could go ahead and post those returns, then we'll add some clarification. Over here also in the IBIT, right? IBIT over here, currently holding open position 20%. This is using the old GBTC solution over here, and like the forward test under progress. Buy side only, right? Bitcoin just entering the market on BTC 101 and still holding that Ethereum position. Not the average return. The MND, could you do what the yearly return is for each year? If no one could achieve it, then of course I'll do it. Deep Power's on it. Over here, if we don't make this leg up on Ethereum, if we're not able, nice coil, nice consolidation over here, nice little liquidity grab, spring over here. If we're able to break up and make a next leg up, this position's going to fly. If it doesn't, we're going to be close to taking profits out of there. I like that a lot. Looks very good. Cardano just exiting over here, now back neutral, and Solana is currently out of the market. We're waiting to get back in. D-Power's got it. So the purpose of this is to say, when I look at something like this, and if I'm trying to plan my retirement and I'm trying to work out what is needed in order to get to where I want to be, I can't just rely on numbers that are just pulled out of thin air. You can't really do that. So let's go ahead and take a look over here. D-Power's got all of them. I'm going to use buy side boost over here. and do a little bit of comparison. So this is for in 2020, Bitcoin had a 302% return. By Bitcoin bull runs 469. Gotta love the drawdown over there. The following year, check this out though. So you have to work with me here. The following year, Bitcoin has a 65% return. We're currently 169% over what is needed. Let me go ahead and put this to the one. Bitcoin bull runs has a minus 5% return this year. I know that's correct. I'm just looking at why it's not holding an open position from over here that's closed. If you don't know what I'm talking about, right? Oh, closed. No. See, right over here. This position that's opened in April doesn't close to May. You all remember what happened in early 2000, January, February, March, Bitcoin 20,000 into 60,000. So hold on one second. Okay. So that position is being included in the 2020 return. Okay. Now, so there we go. That's how TradingView is doing it. It's not right. It's what we have. I mean, it's just the way to work it with them breaking up through a year. So in 2021, just breaking it down year from year to illustrate this, you have a minus 5% return. Bitcoin in the year 2021 had a 65% gain. But if you add up 2000 and 2021, we're still up 100% because we did 469 and then minus 5. This did 300 and then 65. Sorry, still up 95%. Now in 2022, Bitcoin had a minus 65% return, which obviously sets you back your planning. It's not a nice drawdown to go through to lose over 65. Bitcoin bull runs has a minus 4%, preserving all that purchasing power. Now we were ahead 95%, and then we saw that Bitcoin had a minus 65% drawdown. So now we are ahead 150%. But more importantly, it's calculated. 2023, Bitcoin has a massive return, 156%. Go ahead into the Bitcoin bull runs, and you could see that 211%, which puts us ahead another 50%. So now we're ahead 200%. We haven't had these massive drawdowns, and we're able to work in a calculated fashion. 2024, Bitcoin has 124%. Bitcoin bull runs, peace of mind, 82%. So that's less 40%. We've outperformed by 160% without the drawdowns, giving you the opportunity to plan what could be a more methodical, safe. What happens this year? What happens next year? It's such an unknown. All I know is that we're seeing global yields blow out. The situation looks ominous. We're all waiting for the next devaluation, not because we want it to come. None of us want it to come. None of us want to see the, you go to the grocery store and just the basics are becoming unaffordable. No one wants to see any of this happen. It's what's happening. So we have to do our best to be very intelligent, to be very smart, and make sure that we're able to protect ourselves, to protect our families, and to protect those around us. Not only, and we don't know. You can't assume Bitcoin goes up and to the right. It certainly seems like that Bitcoin's trajectory is obviously headed towards a million and not stopping there, but we don't know what happens. So anyway, this is kind of look, this is the situation we're in. This data here is looking at the S&P 500 after a week that gold is up at least 4.8%. This is last week. And the S&P is down 2%. Guys, forget what happens a week, 2, 3. Guys, look what happens a year later. You're either down double-digit gains or you're up double-digit gains. There's like no in between. There's been 1 year and 2 years that it's been just you're nowhere. But most of the years, you're down a minimum. I mean, it's closer. The average here is somewhere around 17%, minus 17%. Or up, the average is somewhere greater than that. It looks somewhere around 22%. That's and no one knows which one of those two it's going to be, and likely it's going to be one of those two. They're almost fit. It's about 45% to the downside, 55% to the upside, and 2 years of no. It is. I mean, this seems to be. If you ask any of us, where do you expect we'll be a year from now? These seem to be the two outcomes that you would imagine would happen, and you could see that that's what the data suggests as well. So far, and right now, NASDAQ here is responding very favorable to giving to the United States, giving the European Union the time they want to work out a trade deal. I would, if there is no trade deal by July 9th, I don't, that's not my expectation at this point. There seems to be like a willingness to work something out. So markets will like, obviously, when we see some type of resolution. We're watching for, after the breakout, we're watching for when that breakdown occurs. We tested into that support on Friday. We tested into that support on the news that that Trump was looking to escalate the tariff to 50% out on the EU, which has since been paused. That trend line just showed us how important it is. So we have to just keep our awareness that if we were to break down from there, that is a major technical breakdown at that point. 10-year. A lot of people watching the 10-year right now. It looks to me, right? I don't know why. It seems so off to me. Why do we have that line there? It doesn't mean anything. It's just, I don't know what happened. But I was watching it this off of you over here. That looks like a clear breakdown. By the way, gold looks, we'll take a closer look at gold. I said from afar, we'll do it on the CTM dashboard. Oil on the liquidity grab, taking out the 30-day high, and then breakdown, retest, seeing whether or not it's going to resume down or be able to find a base over here. Interesting. The US dollar after that breakdown looks to me like it's in a very strong wedge. We'll have to take a closer look at that. Bitcoin trading above $110,000, and equity markets here are having a very nice reprieve after the pause that was given. So let's take a closer look at the 10-year and see what's going on together. And zooming out. So right here, it looks like bonds going bid, right? And we're seeing for sure movement occurring off of what looks to be like a coming arrangement between not only the US and Europe, but between the US and Japan. Markets would love for that to happen. If we see that, yeah, we can. We could look at, we'll look at silver, and we'll also look at CoreWeave. So some reminders that I want to put up there. There's a wonderful video. Michelle, have you seen it? I know you've seen it. When you compare all of Bitcoin bull runs to all of the 8-hour solutions that we have, whether they're buy side only and or looking at buy and sell side. I want to just jump back to this for a second, and I want to jump over to Ethereum, silver. Trying to make my way over to silver. Silver to me looks like it's in this. A lot of people see the massive cup and handle, right? And you can look at it like this, where that's the lid of the cup that I'm drawing right over here. Breakout above 50. And then you see this is the cup, and then the handle will be all the way up to there. And I think so. That's definitely a massive cup and handle going back all the way to 83, right? You can see once the handle is put in, and then the breakout. You remember in March 2023, we had on a monthly view the super cycle breakout of gold out of its cup and handle. Gold leading the way, and so far that is transpiring very, very, very nicely. I could argue India's a big deal, yes. But I look at this and I say, well, this also looks like a nice cup and handle. Here's the cup. It's not horizontal. It's a downward sloping. Here's the handle. And of course, this is only on a 12-year basis. That's a mega breakout. And to me, it's a trend line break. It's already broken, but that also looks like a cup and handle. To me, that's tilted. And that has just broken out. That breakout, by the way, should take us to, I'm not using the wick over here of the lockdown crisis. That breakout of this takes us to a position where that mega cup and handle going back to 83 also breaks out. So silver looks really set to do some things. My opinion, obviously, is that gold is going to continue to lead silver up until monetary policy aligns. And that doesn't mean that silver is not going to continue to work its way upwards, to work its way towards that 50. But after the Fed comes in and we see that next devaluation, that is when we're going to see silver really run really hard. Now, it looks very bullish. The question is, what flat PA going on for a year? That's hard. When I'm looking at the 2 week to see that consolidation that you're talking about. So yeah, it seems to me silver just keeps getting hit hard. There's a lot of I'll say institutions that are still short, trying to cover their positions. They're covering their positions at a rapid rate, right? Let's say in the past, rough numbers here, in the past 30 days, 1/4 of the overall massive short position has been covered. It's definitely consolidating. It's definitely getting ready for a big move. But this was the breakout where, I'm more interested in where this breaks down. And not because ultimately I think that this is going to be a breakdown, but to keep you on the right side. Yeah, I don't see it. I don't see it. It doesn't look like, it's a very difficult question is at this particular point in time. Tomorrow we get those GDP numbers, preliminary GDP numbers. We want to see those. It doesn't seem from the information that we're getting from the Fed that we're seeing any type of slowdown happening anytime soon. When you look at, I'll come back to this. When you look at things like, I think it's an important chart to show, right? You're looking at the tariff revenue starting to put in some pretty sizable candles. This is important because this is ultimately likely, in my opinion, is going to show that these costs are going to be, it's going to cause a decrease in earnings. And obviously some or a portion may be passed on to the consumer, but a portion is going to be, eaten by the corporations as well. and if we continue to see earnings coming down, that's not going to bode well for the stock market. We need to see some things happen though. Like we need to see the job market actually to start coming off. We need to see things like slowdown in the US consumer, which is so hard. There's something like, and I speak liberally here, but it's something like the top 10% of those in the US make up like the majority of sales. So that's put really poorly, but it still captures what I'm trying to say. And if you see an uptick in inflation because of these tariffs, it's not going to affect the top demographics by income in the United States. And is there going to be a slowdown there? I don't know. Um, I don't see a recession on the horizon at this particular moment, but the macro can change rapidly. And there's been many instances where we've seen it change rapidly. And at this particular point in time, we just need to continue taking it day by day. Let me come back to silver, finish up silver. I'm looking for what would be a major breakdown in silver. We seem to be far above it. I think a major breakdown in silver at any point in time would offer an opportunity. I look at Bitcoin dominance right now. It's somewhere, what is it, around 64%? I imagine. I think it's headed towards 70. Is now the time to take some flyers on some altcoins? Or if Bitcoin dominance is indeed going to 70, if indeed we run into any type of, what is it going to be? Is it going to be eventually a recession, a slowdown in the US economy? We already see a lot of the world slow down. That might take a while to recover from. Or we're going to see some type of financial crisis develop. Something that usually when it does, those things are shorter lasting. The recovery out of them is quicker. And no one knows which of those two events is going to happen and what happens in between. Does the growth in the US continue over the next 12 months? I obviously I don't have the answer to these questions, and the problem is you look at what happened in last summer with the Japanese yen unwind, and obviously you saw the problem with trying to front run what you expect to happen in the future. Obviously, risk assets came under massive pressure. You look at what just happened in April with the tariff uncertainty drama, and risk assets took a sizable hit. Right here's silver right there in April, and that's a big hit. Is that one-off event? That's a big hit. 18%. Was that the event? And was that just simply a lot of uncertainty, markets overreacting, and we're going to be going up and to the right throughout this year as a lot of that uncertainty actually becomes a lot clearer and it's not as bad as expected, and the train keeps running? Or were these warning shocks? These are only questions. I don't have the answer to that. I personally think that if you were interested in taking some flyers and alts, right? Well, if Bitcoin dominance makes it towards the 70% mark, that likely is going to be a much better of an opportunity than it would be now. That seems to me the risk to reward is not there, because if we're just seeing warning shocks and there's some rough patches ahead, a lot of these alts could come off another 50 to 70% easily. I personally don't think that we're going to see any type of alt season for a bit of time, a significant amount of time, until we start seeing monetary policy align And as far as monetary policy aligning, like, yeah, we know that when they stopped QT last time, Ethereum bottomed soon thereafter versus Bitcoin. And we're already in a mega Ethereum trade that's open unrealized gains. And we're at a similar point in cycle. QT was drastically reduced, hasn't ended. But as far as alt season, when you start seeing, the majority of alts over a short time outperforming Bitcoin, that happens when there's like rampant speculation and easing going on. And we are so far from that, it's not even close. So, and one of the major problems too is that alt seasons likely needs to be redefined going forward. There are 20 gazillion different altcoins that and counting each and every day, and you're never going to see a situation when there were drastically less coming back 8 years ago in 2017, where you see such a move overall. There will be certain alts and select alts that always outperform if you're able to pick those. But as far as the majority, and whether or not it's we talk about it's the top 10, the top 50, or top 100, but when they outperform, we got some time to go. Monetary policy is not close to being aligned at this particular point in time. And right now, more importantly, this is about Bitcoin and Bitcoin's adoption. And you are seeing it's clear as day, right? I've been telling you, retail doesn't matter. The retail doesn't matter. The new retail are these small corporations buying, 50 million, $500 million worth of Bitcoin. So I guess the hard part there, though, is that you could actually see a point in time where QT ends. What happens if you go back to rate hikes, though? Yeah, I mean, this is not we're not anywhere close to alt season. So we'll continue those conversations as they develop. Let me move back over here, cover a little of these bits of information that I really wanted to present to you. And so we're seeing Japan is grappling with the long-standing challenge of its 2% target. And then I see the reason I have this over here is because a lot of people think that the US is never going to return to near zero interest rates and or QE. And I do. There's no way that the US is going to return to QE without at first, for that short time, having to move interest rates down towards zero, because it's not effective if they do. The only way it's effective is for them to have interest rates at or near zero. Ben Bernanke has said it as early as 2012, 2013. Powell has said it as recently within this last year. And it's the only way that QE is effective. The only way they're returning to QE is if something breaks. Guys, sharper, more violent cycles. The financial system is more fragile than ever. I can't imagine a world where the US is not forced to return to QE in order to keep the system afloat at any particular point in time. So if Japan is forced first and soon, I'm so interested to see the market's reaction. Like using Japan's market, its equity market, its bond market, its currency, to see what their reactions are to these things as for when the US does it as well. So that's the hope, that actually Japan actually returns first. We were looking at the 10-year and we saw that little sell impulse underway. So I want to focus a little on that. And it seems to me that if you're zoomed in, this looks like a really yes, bonds going bid. If you zoom out, and I want to zoom out with you, this looks like massive consolidation. We talked about a move towards the bottom over here would just be well within range. My expectations here is that we're going to break up to the outside, that yields are going to sell off and likely go a lot higher than the 5% people are looking to. I kind of zoomed out with you and I showed you the risk that if we break above 5, right? If we don't hold up over here, that 6, this area over here could come very quickly, very violently. Anyway, let's go ahead and take a look over here. Everyone's expecting yield control curve. Japan already tried it. So I guess let's read this first. Japan already tried it, and we know where it got them. A spectacular bond market implosion happened right in front of us. Now every Japanese bank, pension fund, insurance company is holding a massive blag of flaming excrement. And so this is the result of yield control curve. Why would any rational investor hold sovereign debt from severely endowed nations? Well, first of all, just because it failed in Japan doesn't mean it won't be tried elsewhere, and including in the US, because it buys time. And that's really the desire of a lot of the powers that be, and including politicians, is to buy time. Now, the question here is, why would any investor? Well, a lot of these institutions have certain mandates that they need to behold. They don't really have the choice whether or not they own foreign debt, and that includes now the stable coins, right? In order for that, like with the passage of the Stablecoin Act, they have to own these U.S. treasuries. That puts a bid into the debt. Blah 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 blah. This is worrying. When the Economist is talking about bond yields are soaring across the world, that might be a signal actually that we're getting ready to actually see the peak, right? Usually, whether it's Barron's, the Economist, when they catch on to the current trend, that's when it's ending. Look, even though my expectations are out of this consolidation, we're going to break up ultimately and much higher than people will expect. This is where we break down this confluence. And at this point in time is when I feel safe to be bid on bonds. That's what I'm continuing to watch over there. If you've been following, the first time I was introduced myself to the All In podcast was when U.S. Treasury Secretary Besson and Commerce Secretary Litvik went on the All In podcast, and they were tremendous interviews. And since then, I've listened to a lot more episodes of it. Now, they seem to me to be quite cheerleaders recently of the current administration. From my understanding, they were all Democratic affiliated in the past and now have actually embraced the current administration. This is the first time I've heard them talk negatively about the administration. So I feel it's really important to take a look at. So we're going to go ahead and I'll start with this point.
And then the last thing I'll say is now, to top it all off, I think that Jerome Powell will see the writing on the wall. Many aspects of this thing are inflationary. And if they're not handled well by the Senate, he has a lot of room to actually increase interest rates. Oof. So I would just say that the Senate has an incredibly difficult job. I think the president has an even more difficult job about what to do right now, but the House did nobody favors. They did not do.
Now, to go back to this, they think that the current, what do they call it? The big beautiful bill is an absolute disaster. Let's just hear about 45 seconds of this together.
Unfortunately, for President Trump's agenda and for a MAGA movement, this is the worst of all conditions. The financial markets will punish this. The political calculus will be for the president to decide how much credit he actually wants to take for this bill. Because even though it has his name on it, the contents of the bill are different in actual facts than what I think he intended. Mm-hmm. And what I mean by that is when you look inside of what happened in the 11th hour last night, it's disappointing. This thing is like anti-Doge. If Doge was meant to be a reflection of the American voting population.
So we saw the pivot, right? The pivot from cutting government spending to Besson saying, look, we have no choice, but we have to grow our way out of this. And in order to grow, you need government spending. It looks like that's the direction that we're headed in. If the government begins spending, what's going to happen to inflation, right? And then you could see Chamath, I didn't even know how to say his name ever, Kamath saying, well, that might actually force the next move out of the Fed to, if they get their way, to raise rates. Now, this is what we're going to have to navigate. Expectations were that we were, first of all, when everyone was extremely, extremely bullish on higher inflation, we were like, no, it's going to roll over. And then for a few months, we saw it roll over strongly. And then at the bottom, we said, well, likely because of these tariffs, we're going to begin seeing it run the other way. But we've also seen some other factors like oil rising during this particular period. That's going to put pressure on inflation now going the other way. It's not really rising. It's off its lows, though. Let me come down to a chart of it. So not at all. It's off its low. That's not really putting too much pressure out there. If we see that buy impulse trigger, that would be worrisome for the direction that's heading. Very, very, when we looked at that chart and we said, well, from this point on, 12 months looking forward, markets could be down tremendously or up even tremendously more. It's kind of difficult to get a read. Thank God that we have our mechanical solutions in place in order to go ahead and stay on the right side. Now, a lot of people don't have the fortitude to be able to do it. I saw this over here. This is great. This is from Peter Brandt. And he's like, year after year after year, 85% of profits come from 10 to 15% of my trades. The remaining 85% of trades contributed nothing. The challenge is to prevent 85% from destroying the 15%. And that's where risk management comes into play. You have the risk management. So I want to come back to the video over here with Stan Druckenmiller, because he talks about concentration. And concentration so much is that, well, we concentrate on normally 4 stocks. We have 3 right now because of FNGU out of play. A lot of people concerned about alt season. When alt season's kicking off between Ethereum, Cardano, and Solana, knowing when to be in the market and when out, massive gains to be had. This is not alt season. They're not outperforming. It looks like Ethereum has made a nice little turn over here. I don't know if it's going to continue or whether or not Bitcoin continues to make further legs down versus Ethereum. Right now, Ethereum is running. And this is a great example of those 10 to 15% trades. The win ratio on Ethereum is very low, 35%. And out of those 35% that are profitable, even less make up the majority of those gains. Even less make up the average winning trade, 20%. Right? Average losing trade, 2.6%. Now, the largest winning trade, 150%. It's an outlier. So is a 50% trade on Ethereum is an outlier. Doesn't happen often, right? But anyway, JC, good to see your name in here. So as far as when a recession is coming and whether or not Trump is going to delay it or cause it, guys, the markets are there's so much to interpret. And right now, obviously, markets are looking at what happens with the tariffs. How far down are they going to go? What ultimately is going to be what the ultimate number is going to be? Not with China, of course, but with all the other trading partners. Of those tariffs, how much is going to be absorbed by these corporations? How does that affect their earnings? How much is passed on to the consumer? How much does that affect the consumer? Obviously, you see a segment of the population continues to be hurt really bad. You're seeing credit card delinquencies continue to increase. You're seeing car loan delinquencies continue to increase. Student loans just put back on, putting more pressure out on. And then you see another segment of the population that continues to thrive. And this is, not really, being that they own assets and risk is running. They're not really under pressure themselves. It's too soon to say what is ultimately the direction that the economy is heading in, whether or not it's actually something in the financial system that meets some type of friction first and causes that massive printing and devaluation to occur. And to be able to navigate all this takes showing up every day, putting the work in, and figuring it out. And it's not like, oh, here's what's going to happen on X and Y timeline. It's impossible to do like that. And right now we're just kind of in the ambiguity of it all. And yes, potentially we thought by June a lot of this would be worked out. July 9th is the deadline of the pause. If trade deals aren't had and they aren't worked out, do you think that Trump is going to say, oh, well, I'm going to pause it further? Probably not. That's not a good negotiating tactic. People are not going to come and work out a deal. Do you think he's going to go ahead and unpause it? Likely. What will the market's reaction to be to that? Likely not good. We'll take it as it comes. This is just Tuesday. We'll continue at it tomorrow. Everyone, thanks for being here. You are the best. Have a beautiful day, everyone. God bless you. I'll see you all back on the inside.